Anyone who believes in indefinite growth on a physically finite planet is either mad or an economist.
We don't want to focus politics on a notion that involves the rejection of principles around which a large majority of our fellow citizens organize their lives.
We are not as endlessly manipulable and as predictable as you would think.
We are living in an era of financial capitalism, which is taking hold of the world now. All over the world, there are opening stock markets and futures markets and setting up corporations. And at the same time, there's been rapid economic growth through much of the world. But at the same time, people harbor doubts about this. I think that the support for financial capitalism looks fairly secure, but it seems like there's still big doubts. Finance is too fundamental to our civilization. All of our activities are moderated by financial arrangements. And practically anything good or important that people do is going to go through the financial sector. We need to think of finance as something that manages and maintains our goals. Each of us has his or her own goals in life, but in order to coordinate those and make things happen, we need knowledge of finance. And the proper reaction to Occupy Wall Street shouldn't end with protests. What's the next step? The next step, I think, is changing our financial institutions. But that requires some knowledge and understanding of the institutions. It involves getting into them and changing it. So I don't think that there's any moral dilemma about finance now if we take the right attitude. Financial institutions are an invention, a complex invention that facilitate human activities and attainment of human goals. And these inventions are constantly being improved. We're likely to see an acceleration of the rate of improvement because of our new information technology now, and also because of our better understanding of human nature through the rapid advance in study of behavioral economics, behavioral finance, neuroeconomics. We understand people better, and we understand that people are complex. They can't be reduced to a simple model. People have generous sides to them, and they have a selfish side to them. And they have many patterns that are characteristic of our species. Modern civilization manages to minimize the impact of our aggressive or antisocial characters and encourages our cooperation. Financial institutions are involved in doing that. I'm trying to dispel skepticism, in fact, skepticism that I felt at myself at times, about all this financial innovation, about what has happened in the past and what will happen in the new information age. We need to democratize finance, and we need to humanize finance, make it work more for our goals and make it work for real people. I think that philanthropy is essential to capitalism because some people make large fortunes and they can't possibly consume it. You have to give it away. And the problem with capitalism as we have it today is that often people make large fortunes and they get so involved in the game of making a fortune that when at the end of their life, they have no idea what to do with it. And it just goes to random heirs. It doesn't make any sense. So capitalism has to incorporate philanthropy more. But the problem is that philanthropy is not very satisfying in its present form, or it's not as satisfying as it could be. The original ideas that promote our financial markets is that somehow motivates people. People watch the stock market every day. I don't know, it's something that makes life interesting. People like to accumulate, and they like to build something over their lifetime. So we have to somehow guide that and direct that to something better. So I had an idea for another kind of form of business. I call it a participation nonprofit. This would be, say, a hospital or a school, which is normally often a nonprofit, but it would be taking donations in a different form. The donations would consist of selling shares. Okay. Now remember, this is still a nonprofit, but instead of giving money to the nonprofit, you buy shares in it. I'm hoping they would be tax deductible as usual. And then the shares receive a dividend from the profits. But they don't go to you directly. They go to a special closed account in your name, which allows you to use those profits for any charitable purpose. But you've committed yourself, when you bought shares, you've committed yourself to being a philanthropist. Nonprofits function well because the public respects them and thinks that they are good, and they will be generous to them and support them in many ways. So it has that benefit. But it also has the accumulation benefit that you can watch your account grow through time. And then I'm thinking people are fundamentally egotistical. They try not to reveal that, but there's a human side. Everyone has an ego. So people can use their thing for charitable purposes, even in an egotistical way. Your dividends, you could give the money to some university and name a building after yourself, if it were that big an amount. So I think that people have the same acquisitive feeling satisfied by donating to a participation nonprofit. Government finance is very traditional today, all over the world. Government, most of the time, just issue straight debt. It has an interest rate and it has a term. Companies do that too, but they don't just restrict themselves to straight debt. They also sell shares, and they have many other forms of options and swaps and the like. So my proposal is that the government should get a little bit more sophisticated in its financing and start selling shares. So the government should issue 1 trillionth share of their GDP. The shares would pay a dividend. Last year it would have been something like £1.80, which is 1 trillionth of the UK GDP. But in coming years it could go up or down with the whole economy. This is like a stock market. These things would have a price in the market. They'd be tradable, but you would be actually trading the UK. Now, why is this a good thing to do? There's a lot of aspects to this, but it involves managing the risk to the government. Right now, the UK economy is underperforming, but the debts come due just as much as always. So it's creating a crisis that's brought on the whole austerity program here. In short, the British government, like all other governments of the world, has leveraged themselves up by borrowing money on a fixed rate rather than issuing shares. So if they issued shares instead, they wouldn't be in the budget crisis. Moreover, I think that the shares would get a really good price. Right now, mortgage instruments are just simple debt contracts. But people get in trouble. As you know, UK home prices have fallen a lot. They've fallen even more in the United States. In the US, we have 11 million households who are underwater on their mortgages. That's 1 in 4 families with a mortgage have lost everything. In that, it's just astonishing to me that we just let that happen. And there's no plans to change that. It's still the general policy that a young family puts all of their life savings into the mortgage, and it leverage it up 10 to 1 by borrowing. And of course, if home prices go down, they're wiped out. So I'm proposing that mortgages have built-in workouts that depend on home prices. So if home prices go down, then the homeowner will have a lower mortgage automatically. And if we had had that before the crisis, we would not have the subprime crisis, the home crisis that brought on this financial turmoil. The slogan of Occupy Wall Street is, "We are the 99%. The Occupy Wall Street people are very animated by the current level of inequality. And there doesn't seem to be much focus on the fact that it's trending worse. And this trend might continue, and it might get much worse than it is now. So my thought is, at least let's think about the future, and let's plan now to prevent it from getting much worse. And so the idea is then some limit to the extent of inequality has to be decided on now. And we say that automatically we tax the rich more when that happens. Raise taxes, maybe a lot if necessary. But we decide it now, not wait until it happens. Yakov Trop is a psychologist who has developed what he calls temporal construal theory. And in this theory, it's just that people are more idealistic about the abstract or distant future than they are about today. So if you talk about raising taxes on the rich today, there's huge opposition. But if you talk about raising them in 10 years contingent on some development, then they're very much more likely to be generous. So I think we should do that now. Now, this is finance because I'm talking about risks. I'm talking about the risk of worse inequality, and I'm talking about getting kind of an insurance policy now against it. Financial innovation is the clear path to dealing with these concerns. But financial innovation for young people who are considering careers, if you are concerned about Occupy Wall Street issues, maybe you should be learning about finance and you should be getting involved and trying to make it work better for the future.